2 weeks ago, the Governor of the Reserve Bank, Michelle Bullock, gave a speech which included the RBA's latest inflation forecast. Here it is. Now, that was 3 days after the United States and Israel attacked Iran, when it looked like being a fairly quick business and the oil price had barely gone up. Since then, things have got a lot messier, with Iran sending explosive drones all over the Middle East, US President Donald Trump demanding unconditional surrender, and the pugnacious Secretary of War, Pete Hegseth, being, well, pugnacious.
We have only just begun to fight.
And then last week, an interview with the Reserve Bank's Deputy Governor, Andrew Hawser, was published, updating the Governor's comments, pointing out that the earlier inflation forecast was made well before the US and Israel attacked Iran. Mr. Hawser said further increases in prices from Iran is not a helpful development. How long the price of oil remains high and whether it keeps rising will, of course, depend on how long the fight goes on. But the bond market is predicting inflation. Money markets are now saying a rate hike on Tuesday is a near certainty. Now, that's a big change from a 30% chance before the Hawser interview. And for the next meeting in May, it's a real certainty, according to the futures market, with another one expected later this year. But this inflation will be caused by supply shortages, not booming demand, and higher interest rates will not open the Persian Gulf. And as Andrew Hawser himself said, the rising oil price will press down on global activity. So the only reason to raise interest rates is to control inflation expectations. That is, to persuade Australians that the RBA is on the case and won't let inflation get out of hand. But the economic consensus is starting to shift away from the cruelty of adding to an oil shock with a rate shock and towards maybe cutting rates to prevent an oil shock recession. So on Tuesday, as well as watching what the Governor does, keep an eye on what she says about that.